Hello, so it's January the 8th, 2021. Welcome to the new year. Same as the old year, only with a different handle. Today I'm going to make 10 investment predictions for the year ahead. And I make these predictions with the usual disclaimer. Predictions are a mug's game. These predictions are worth exactly what you've paid for them. So first up, COVID-19. And as you'll all know from having read my magnum opus, Daylight Robbery, How Tax Shaped Our Past and Will Change Our Future. One of the recurring themes of history is that governments extend their taxation and controls during a crisis in a way that they never could during peacetime. Were it not for the Napoleonic and the World Wars, for example, we would never have to pay as much income tax as we do. Income tax in the US was first imposed in the Civil War, yet it never touched the lives of ordinary Americans until the Revenue Act of 1942 passed to fund the US war effort in World War II. Yet when the crisis passed, the taxation and controls never returned to the levels they were at before the crisis began. When World War II ended, income tax for every man never went away because now there was the rebuilding effort. And the Institute of Fiscal Studies calls this the ratchet effect. In the UK, having won the general election of 1841, campaigning against income tax, British Prime Minister Sir Robert Peel reintroduced it to the UK in 1842 as a temporary measure to fund a deficit emergency, and today, 178 years later, that temporary measure remains. But back then, the tax only affected higher earners. It took another crisis, World War I, to bring the tax to ordinary folk. Quantitative easing, a form of inflation that it inflates the money supply, was introduced as a temporary measure to address the banking crisis of 2008. Nobody voted for it, and without the global financial crisis, it's doubtful it would ever have been allowed to happen. Yet today, 12 years on, it is normal. The Bank of England just printed a few more billions this week. And this is a long way of getting to my first prediction. And that is that we will never go back to the freedoms we enjoyed before COVID-19 came along. The precedent of the government being able to close down the economy has been set. This is the new normal. Whether vaccines work or not, COVID is now part of our lives. New strains of the virus will come along, some more dangerous, some less. But control of movement, testing, tracking, tracing, quarantining, vaccination, bailout money, furlough. These are all steps towards universal basic income, by the way. Masks, even lockdowns. These are the new normal. Remember airports before 9/11? Airports never went back to what they were. The same applies. You never had to take off your shoes. You never used to have to wear masks. Now you do. Those who optimistically look forward to getting back to how we were are going to be disappointed. Prediction number 2, inflation. Expect even more of it. I've noticed on social media lots of people posting their investment returns for 2020, and these returns largely have been excellent. We're all geniuses in a bull market. But before we run out and congratulate ourselves, it must be remembered that money printing last year was extraordinary, and the result was extraordinary returns and speculative bubbles aplenty. Tesla was up 750%, Peloton 435%, Zoom 400%, Bitcoin 300%, Amazon 75%, the Nasdaq 50%, gold 25%, the S&P 20%. Base metals had a great year. The UK housing market is at all-time highs. Oil was down 20% and commercial property in the high street took a battering, but funny money has softened that battering. And the US stock market is as important to the US economy as the housing market is to the UK, or deemed as important, and both will be protected at all costs. Wall Street is addicted to stimulus, the UK housing market is addicted to low rates. It's absurd that both are more valuable than they were before the decimation of COVID. But the reason they are is funny money. And this inflation doesn't show up on official measures because official inflation only measures consumer prices, which in a competitive market tend to come down in price as productivity improves. Is 2021 the year the economy finally rids itself of this drug dependency? Nope. Extend and pretend continues, asset prices go higher. The anti-inflation narrative might get more pronounced in 2021 as more people cotton onto the racket, particularly with Bitcoin going up, but the funny money is still going to push multiple asset prices higher. A lot of people have saved a lot of money this year. They're still being paid, but they're not spending as much on travel, clothing, entertainment, eating out. That's a lot of savings waiting to, particularly in people who work for the public sector, waiting to be invested. And that is going to push asset prices higher too. Which brings us to prediction 3. One of the biggest beneficiaries of all this inflation is Bitcoin. And this new vogue for corporate cash to be held in Bitcoin to escape cash's annual 15% loss of purchasing power against assets continues. Bitcoin goes north of, $50,000 as a result. On the last breakout, Bitcoin went from 1,200 to 20,000. That's 20 times higher than 20,000 is 400,000. I doubt it goes that high, but each new double is always harder than the last one. But the current momentum is extraordinary, so it goes higher. But 2021 also sees one of Bitcoin's triennial monster 50% plus corrections. Prediction 4, gold. I was going to say that it was going to break out to new highs, but that was before the monster correction of the last couple of days. I'm not so sure now. All that inflation hedge money is abandoning gold for Bitcoin. But anyway, new highs for gold. Number 5, US stocks. They break out to new highs as well. The S&P 500 goes above 4,000 for the first time. Number 6, Tesla. The amazing bubble that is Tesla finally burst. It's an amazing company. Elon Musk is a fantastic promoter, but there is no way it's worth what the market's currently pricing at. 15 times the value of BMW. Ridiculous. Prediction 7, UK property. The UK housing market continues its relentless grind higher. The alienation of the younger generation through unaffordable housing resurfaces as a political issue. The root cause, funny money, is not addressed. We'd probably get a change of housing minister, bringing the total to 19 since 1997. As for commercial property, that day of reckoning comes in the spring, when all the new tenancies come to you, especially in the hospitality sector. And hipsters start to occupy vacant commercial properties in city centres and turn them into live workspaces. The older middle class exodus to the country continues. Prediction 8, oil. Brent goes to $70. Our future might be green, but it's going to take lots of oil to build it. Prediction 9, tax. The Chancellor raises capital gains tax. It's only fair to do so, and it becomes closer in line with income tax. Prediction 10, sterling. The pound goes above 140 and retests 145 for the first time since you know what. And finally, your Brucey bonus sports prediction. Liverpool win the league, Fulham, West Brom and Sheffield United go down. So there you go. That is what 2021 has in store for us. Now for the actual events, which always mess up the predictions. Thank you very much for watching, everyone. Please subscribe to my channel. And if you like my content, please either buy my book, my excellent book, Daylight Robbery, about the past, present and future of taxation. It's been very well received. You can get it from Amazon, and the audiobook is very good if you like the sound of my voice, or buy my CD of amusing songs, and you can get that directly from me from my website. In the meantime, everybody, I hope my predictions come true and you all think I'm a genius, and Happy New Year.